Hello and namaskar, traders. Well, the series of 6 consecutive negative weekly closes for the Nifty index has come to an end, thankfully. Last week was like a 1% bounce back for the index. Nothing much has changed though. It's not that it's the time for us to celebrate on the long side. But there are a few subtle readings that we should not miss. We will be able to pick them up, these readings, identify them, when we take a closer look at the Nifty and the rest of the sectoral charts. So join me like every weekend you do, hopefully. Let's take a look at the Nifty, analyze them thoroughly with the sectoral charts. Let's try and figure out that if the market extends the rally, then which are the sectors that can contribute. Come, let's analyze together. So let's begin. I have my usual 2 time frames. On the left hand side, it's the Nifty weekly. On the right hand side, it's the daily time frame. Usual Heikin-Ashi charts with the next price and the next RSI indicators, which more or less these two takes care of all the analytical part at my end. So step number 1 is I'm going to change the Heikin-Ashi to bar charts on the weekly just to show you that this particular series of 6 negative consecutive weeks comes to an end last week with a 1% around 268 point bounce back. Nothing huge, nothing handsome, but at least a stop. In terms of the trend, in terms of the momentum from the weekly time frame, the things are negative. They're not that great. If I move back to Heikin-Ashi, I've got a consolidation bar, which I call it an HAGB, which makes last week's low, which is very close to last 2 weeks' low. As you can see, last week low for the Nifty spot was 24,347 and previous week was 337. So it's more or less like 24,300, 350. So 24,300, 350 has clearly become the immediate breakdown point or trigger for fresh breakdown or weakness. It is also your short-term support. Now, from the weekly charts, we do not get any sign of strong, sign of positivity based on which we can say that the markets are likely to go up. For that, we have to come to the daily time frame. Now, when I take a look at the daily time frame, I can see very clearly that the market has spent some time, or should I say has created lows, support at this area and has managed a bounce back. Now, this bounce back has not been easy. And what I'm going to do is I'm going to turn this again to the bar chart to discuss. The first sign of some meaningful bounce back came Thursday, 2 Thursdays back, that's 7th of August. It was disappointed as the next day it fell almost, it gave away all the gains. Then all of a sudden it bounced back, it opened higher, then it slipped. This was, if I'm not mistaken, last Tuesday. This for me is the important bar range going forward for at least the next couple of trading sessions. What we have seen in this area, especially in these 4 trading sessions, is friction, noise, volatility. Stop losses, long trade stop losses would have got hit. And with this move, few short trade stop losses would have got hit. So I think in this area, the market has found a bit of equilibrium. Earlier, supply was greater than demand. It was a downtrend. The market is probably trying to figure out and find some equilibrium. After Tuesday's range, the next 2 days, the market essentially does nothing. It just time pass within Tuesday's range. And so Tuesday's range becomes important, especially from the bullish point of view. So if I want to figure out beyond which level I'm going to turn more bullish, it has to be Tuesday's high. Tuesday's high is 24,700. So we hopefully will need a move above it, and a close above it will give me some degree of confirmation and conviction that yes, this bounce back, which was 1% last week, is showing signs of another 1% or more. Until 24,000 has taken out and closed, it is still, we should be still a little bit cagey and, careful. This is on the long side of the story. If the market, however, slips and continues to show weakness, of course, the first level is Tuesday's low. Now, Tuesday's low is around 24,465. So we're looking at 24,450. 24,450, if it slips, then this level is also not far off. So level number 1, level number 2, if these two levels are breached, then we are headed for further weakness. I doubt what I said right now, because what I can see from my momentum indicator, which is improving, and the trend indicator, which is still very much down, it's creating a slant divergence. And whenever I see a slant divergence shaping up, it always brings in volatility with it. So if the market falls, the trend indicator will continue to slip down. The momentum will not slip down that easily. The momentum will continue to stay up. And this kind of a situation where both of them are different will lead to choppiness and volatility, right? So if the market slips, Tuesday's low or back to these lows, I won't be that bearish, but the markets are falling, but I definitely expect choppiness, noise, and volatility. So I'll be very selectively short, if not at all. So what can we say about the one word or two words for the view of the market? I would say stay very, very selectively bullish. And there's a reason why I say selectively bullish, because there are few pockets which have shown signs of bullishness. So be very careful. After 6 weeks of fall, we've got a selling stoppage, a halt. We would look to participate in the bounce back, but we need to be very, very careful. We need to take one day at a time and not just take the market for granted. That's the Nifty. With this, let's quickly take a look at the mid cap and the small cap. Now, the small cap, quick bar chart first to get some understanding of last week's range, has not done much, isn't it? It is still in this corrective phase, and it had a great run up. It's going through a correction, and that's it. If I turn it back to an Heikin Ashi is solid red bearish for 3 weeks. We have an extended sell-off on the daily time frame. You've got a bit of a bounce back, but that's it, to be honest with you. There's no sign of strong bullishness. At least we saw something on the Nifty, which is missing on the small cap. What about the mid cap? Same story. What does it tell me? It tells me that last week's bounce back, it seems like it was more supported by the large caps, by the index stocks, rather than the broader markets. Especially now that I am on the CNX mid-cap index, if I turn it to a bar chart on the daily time frame, you'll see that it slipped significantly. It created an outside bar on the daily time frame. If you see small cap, it also did the same thing. So the slippage, the weakness from the small and mid caps was evident on last day's trade, that was last Thursday, which was not there that much from the Nifty. This is where I can clearly see a little bit of a disconnect, or should I say the large caps, the index stocks are showing better strength, or should I say have shown better strength in the last 2 trading sessions compared to the broader markets. That's it. In terms of levels and views, it remains the same. The small cap and mid cap, unless last week's range is taken out, you should stay careful, right? So I will be, if I'm looking to trade the bounce back, if I'm looking for long trades, I'll be first, more interested in index stocks. If I'm looking for, let's say, any sector, then I would first take a look at the first 3-5 stocks and not any of the mid category or small category stocks of that sector. All right. So index stocks, heavyweight stocks, approach first if you're planning to participate in the bounce back. And yes, if the bounce back extends further. Now let's come to the sectors. We always take a look at the sectors with the help of, we always keep the RRG graphs open and we analyze it. So here I am with the Strike Analytics page, the NSE sectors, comparing with Nifty 500, time frame weekly, and the count I have kept it to 7. Now why 7? because it's been 7 weeks. If I go back to the Nifty chart, from the top, it has been 7 weeks. And my window of comparison is who's doing what and how in this last 7 weeks. Do I get any sectors which has closed positive in the 7 weeks? Is there any sector which is showing relative strength during the 7 weeks or relative weakness? So that's my window of comparison. When I come here to the 7 weeks comparison with the Nifty 500, and if I sort in terms of percentage change, the first thing that I notice is Nifty Auto and the Nifty FMCG. These are the only two sectors which have closed positive, some gains, some eager gains in the last 7 weeks. Rest all of them are negative. And one clear differentiating factor is the auto is in the leading quadrant and the FMCG is in the lagging quadrant. Okay. Apart from that, nothing really stands out. It seems like more or less same number of stocks in the lagging, improving and leading. In the weakening quadrant, there are only two sectors. Let's take a look at them one by one. Of course, the first is Nifty Auto. Nifty Auto has been spending some time in the improving and all of a sudden has picked up some momentum and has moved on to the leading. It's a new entrant. It's not that it has been a leading sector for a lot of time. No, it's just a new entrant. It's not too far away from this axis. It means it does not have a huge amount of relative strength. It's just showing signs of relative strength. That's what the RRG is trying to tell us. If that's the thing, and if I come to CNX Auto chart and try and analyze, then the first thing that strikes me is a relatively better looking chart than what we are used to seeing in this current market condition. It has not fallen like the Nifty over the last 6-7 weeks. And the momentum is also not that bad. So it has not gone up, neither has it come down. It had created a range. It's at the upper border of the range and it's ready to break out. That's what it is telling me. And that's why it is showing some relative strength. When I did take a look at the auto constituents, I figured out that the two-wheelers were showing relative strength earlier, a week, 10 days back. And last week, it is the heavyweights, the Mahindra, Maruti, Tata Motors to some extent, which has picked up. Now, please understand, auto is heavily skewed with just two names, Maruti and Mahindra. These are the two most heavyweights. And these two stocks have to give you a breakout, a sustained move for the auto to break out and move further. So keep an eye on the top few names which makes up the auto pack. Auto looks relatively good. What the RRG graph is telling me and what the actual price chart is telling me matches. One should be looking forward to this breakout in the next few weeks. In the leading quadrant, we also have the mid cap and the small cap. The mid cap and the small caps positioning is brilliant. That is, they are significantly away from the axis, means they have a good amount of relative strength. But off late, they have been losing momentum. And that's exactly what we saw. When we saw the mid cap and the small cap charts, we did see that off late it has come off quite a bit, off late. But before that, they had a significant rally. Now, I was discussing this earlier. We need to understand. I'll just spend, take a detour for 2-3 minutes and help you understand what I'm trying to say here. Say, if I go back to the Nifty chart, and this was a freakish low. This was a low where the market did not spend too much time. But anyways, it is a low. And this is a high, right? If you want to figure out that from this lowest point to the highest point, what was the extent of the rally for the Nifty was around 17.5 or 18%. And this low was around 7th of April. And this high was around 30th of June. Now, all the sectors will not match these dates, but more or less. So around 18% rally for the Nifty. If I come to the small cap and do the same exercise from this low and drag it all the way up there, more or less, you'll get a 36% rally, double. If I do the same thing for the mid cap, from this low, which will be more or less 7th of April, to this particular high on a low to high basis, you're looking at a 27% rally. So 18% from the Nifty, 27% from the mid cap, and 36 or 37% from the small cap. That is the reason why the small cap and mid cap, irrespective of the recent correction, is still enjoying a position in the leading. इसका मतलब क्या है? What does this mean? It means that the small cap and the mid cap are still relatively stronger pockets. Still. Right? So if I have a relatively strong sector which is going through a meaningful correction, for a long only trader, from the long point of view, I should be looking for signs of revival and reversal from the daily chart. Right? And that's the meaning that I get from this list. When I take a look at the RRG graph and the leading quadrant names, and when I compare with the actual price chart, I should be looking out for long trades over here. That's what I check on the price chart. Is the price chart kind of sync with the RRG? So I would still say, even now, the mid cap and small cap does have an opportunity, but they're not ready. At the beginning of this video, we did see that the market's giving a little bit of more importance to the large caps. So as I move forward next week, the first few days, I definitely will focus on the large caps. But I'll be keeping an eye on the mid and small caps, that are you picking up or not? Are you trying to do a catch-up game or not? Because you're still a relatively strong sector. You're not an FMCG, right? Why did I pick up FMCG? I'll discuss that with you. The other two sectors which is there in this leading quadrant is the PSU Bank and the Realty. Now, the PSU Bank's positioning is not bad. It has got quite a bit of relative strength. It has left a lot of momentum and it's just nudging towards weakening. It's on the verge of going towards the weakening. Let's try and understand. If we come to the CNX PSU Bank index chart, we do see a pretty decent rally. And this rally, if I'm not mistaken, started much before that 7th April low. It was around early March all the way towards here. It's a 31-32% rally. It's not bad. And you can clearly see the extent of the correction is not that steep, what we saw small cap, mid cap, and the Nifty. So it has gone more. It has gone up more. It had gone up more. It has come down relatively less. Take a look at the daily chart. My state of flow is positive. This is one of those rare charts where the daily chart is state of flow positive. I think it's the same with the auto. So relatively strong sector, yes. Has fallen less in the correction, indeed. Short-term charts have improved. Of course, they have. What should be my view? Bullish. So auto and PSU Bank, I should mark them green. I should mark it bullish. One should be looking out for predominantly long trades. The other one in the leading quadrant is that of Nifty Realty. Realty had a great run, and it has also come off quite a bit. The fall of momentum. And as you can see, it is also losing from right to left, means it's also losing relative strength. Must have fallen quite a bit. With this in mind, if we take a look at the Nifty Realty Index, which is this one, yes, it has fallen quite a bit. The rise. Remember, the Nifty rise was 18%. The same thing for the Nifty is more or less 37% for the Realty. So big outperformance. That's why it's still in the leading quadrant. But the fall is also significant. The fall is not a small one. If I try and figure out the fall from the daily chart, high to recent lows, it's fallen around 17. When Nifty has fallen around 5, Realty has fallen 16. So the extent of the rally was sharp. The extent of the fall is equally sharp. That is why the Realty in the RRG graph is struggling. But if I take a look at the Realty's chart, price chart, I had drawn this zone earlier, and it is doing some time pass in that zone. My first and early signs will come from momentum indicator. Is it positive? Not yet. Any divergences? Nah, not yet. So are there any signs of positivity based on which a relatively strong sector can bounce back? I don't have signs of that. I have that signs on the Nifty. I have signs of that on the PSU Bank. I have marked them green. But I can't mark Realty green right now. Keep it on the watch list and we'll evaluate next week. So from the leading quadrant, clearly auto PSU Bank stands out. Mid and small cap, very early signs, not confirmed. Same goes with realty. The next quadrant is the weakening quadrant, and the financial services are still there, losing strength, and the bank Nifty is also there. They have been in this quadrant for a very, very long time. The private bank was also there. If you remember, the private bank has now slipped and it has entered the lagging quadrant. Now, if you follow my daily analysis, I do share my view on the market once, twice, as I see, as I feel so, within my personal app, as well as a couple of my social media platforms, or in the Telegram channel also. If you want the links, it's already there in the description box. But if you follow those write-ups, if you follow those analysis, I've been talking about the fact that until and unless we see some participation coming in from the bank Nifty, private banks, and or CNX IT, it will be very difficult to break out. For the Nifty, it will be difficult to reach 25K. It's not going to be easy. A move from defense and capital markets does not mean too much to the Nifty. It has to be banks, financials, IT, energy, capital goods, and stuff like that. With that in mind, when we come to the bank Nifty, should we do that relative strength analysis in terms of percentage and figure out? Bank Nifty will give you significant rally. For the bank Nifty, a 20% rally is pretty good. And this is more or less same time. Bank Nifty has just started to, underperform in the short-term point of view. So it's a relatively strong sector earlier, not as strong as what we saw in 37% in small cap and realty. That's why they have slipped to the weakening. This is the reason. See, Bank Nifty 20% vis-a-vis 18% Nifty. That's why they have come down. Small caps and the realty are still up there because they had gone significantly more than 18%. Nevertheless, this is an important sector. Weekly charts, not good. Weakish. Weekly chart, by the look of it, correction after a 20% rally. Daily chart, noisy recently. By the shadows on both the sides, it's choppy. A look at the bar chart will show you gains, losses, gains, losses, gains, a little bit of gains. So it's been very, very seesaw, yo-yo kind of a price behavior. Momentum is trying to improve, trend nowhere there, but it's choppy. This is where stop losses get hit. This is where you're not too sure. Earlier, you were relatively comfortable on the downside. Now you're not. This is not the right time to short Bank Nifty. Will it bounce back? We don't have confirmation. Unless I have confirmation, I can't flag it green. But because I have signs of halt, stoppages, I'll be interested. I'll be keeping an eye on that. You have to keep an eye on Bank Nifty. Come on, if you trade the Indian markets, you cannot ignore Bank Nifty because of the weightage. Within the Bank Nifty, who enjoys the maximum weightage? The private banks. What do you see in private banks? In private banks, I see a pretty sharp rally. The rally was around 19%, similar like Bank Nifty, and short-term correction that is very, very evident. When I come to the daily time frame, I do see signs of momentum slowdown, but no signs of price recovery. Momentum is a leading indicator. So momentum should slow down, momentum should reverse, price should follow. Ideally, it should flow in this manner. At this current juncture, the selling is just showing signs of slowdown, nothing else. So I cannot jump into any conclusion. Still weak chart, wait. Also remember, we are evaluating, understanding Nifty private bank. Then what you have to do, you have to go inside the private bank, the constituents, and then you will realize, okay, it's because of Axis Bank and Kotak Bank that the index has come down. On the other hand, ICICI Bank is all right and HDFC Bank is showing strength. So it's among the top 4-5 names, it's kind of divided. But then when you take a look at the PSU Bank, you might see that SBI has broken out, it's looking good. PNB and Bank of Baroda are on the verge of giving you a move on the upside. So more cues will come out from PSU Bank than private. So the choppiness, the noise is likely to stay within the private banking pack till it bottoms out. When we discuss this, you have to discuss CNX Finance. I'll quickly get this done because CNX Finance will give you a very similar picture. Rally, short-term correction, deeply oversold, lot of noise, no signs of momentum improvement or trend improvement. So no flag, no red flag, no green flag, watch out. By the way, CNX Finance on the RRG graph should come. Okay, it is there. We have discussed this in the weekend quadrant. So Bank Nifty, weekend quadrant, finance, and private bank. We touched base on private banks also. Now coming to the lagging quadrant, FMCG, PSU, and energy, out of which FMCG has been enjoying this red quadrant for a very long time. It has improved the momentum, but it is the weakest. Relative weakness is the max when it comes to all the sectors. It's FMCG. Why? Why so? Because recently you will remember that FMCG stocks had gone up. Hindustan Unilever had a great move. Dabur also had a good move. So why is it underperforming? Let's understand. If I open the CNX FMCG, and it should hit you the moment I opened it. You see where the index is right now. Where is it all-time high? And where was the low from where it bounced back? So if I do that info line thing that I was doing from March or April lows, and I just pull it up till there, you see a 15% rally. You just see a 15% rally where the index was 18%. The reality was what, 37 or 38%. The mid cap was 27%. The small cap was 37%. So you now understand in terms of percentage. After that, what the CNX FMCG has done? Nothing. It's gone range bound. The daily chart will reflect that. It went up. Whatever it went up, it came down. Whatever it has gone up recently has also come down. Nothing is happening. And this is the reason why it is still in the lagging quadrant. This is the relative strength understanding. So, let's talk about the weekly chart. In terms of trend, to be honest, trendless. In terms of momentum, it's very difficult to say. Very, very range bound. Heiken has just turned negative. Daily chart, my state of flow is negative. So I have negativity from the daily. Weekly is choppy to negative. Stay away. That's the best thing to do from this, right? The other two sectors are PSU and energy. Now you will see both of them are very close to the axis and both of them are just a new entrant. They have not been spending time within the lagging quadrant like the FMCG has been doing. No, not like that. Let's take a look at PSU and energy. The energy is important because if I'm not mistaken, after the banks, financials, IT, the next comes energy in terms of weightages. This is where your OMCs, this is where your Reliance comes into play. So not a great rally, still significantly away from all-time high and has given you a short-term correction. Okay, weekly charts, weak. Daily charts, weak. Mild signs of improvement. So there is a slant divergence playing out. There will be noise. Is there any sign of confirmation on the upside like we got in Auto, PSU Bank? Over here, no. So wait and watch. Basic requirement will be last week's high. It needs to cross above last week's high. Energy, I cannot call it any sign of bullishness yet. Next was the PSU. The public sector enterprise chart, okay of a rally, short-term correction. Weekly charts, still not that good. Daily charts, extended correction, distinct improvement of the momentum. Heikens have started to improve and I have HAGP. Over here, the readings are not convincingly strong, positive, but there are signs of improvement. And so I'm going to mark this green too. For the PSU, CNX PSU, remember, it's a very clear, it's right in front of me. I can clearly share this with you that this high breakout is the bare minimum requirement. Once it takes this high off, you should see movement within the PSU pack. So go to the PSU constituents and try and figure out where lies improved momentum, where lies improvement of trend. You can keep them in your watch list for the next week. So I've marked green for PSU. This leaves me with the improving quadrant. I like the improving quadrant the most. Over here, I have IT. Now, where is IT vis-a-vis the axis? Significant underperformance. We know that for a very long time. From a short-term point of view, it's trying to gain. Now, IT is an important pack. It had an okay of a rally. It had an equally bad correction, similar to the reality, the sharpness of the fall. Weekly chart, still not good. Nothing that I can talk about. Daily chart, distinct signs of couple of divergences. Momentum has been improving for quite some time. Trend has been coming off and bouncing off and trying to form a base. My state of flow, which was negative, has come off. So will it reverse to a green state of flow? I have a couple of solid green Heiken ashes, and there are very subtle, very early signs of trend reversal. Can I confirm? Not yet. The problem was last Thursday's trade. If you track markets during market hours, that is live, you would have experienced how well it went up and how quickly it slipped. Most of the stocks did that, which means going forward from Monday, Tuesday, this high is crucial for any kind of a trend reversal. Now, if you don't track prices the way I do, in a very minute manner, you can, for example, in my next price indicator, I have a built-in super trend. सब कुछ ज़्यादातर चीज़ मैंने इस indicator के अंदर ही, I've built them within the indicator so that I don't have to go for another indicator. One guy will take care of it. Now, what I have is a super trend, short-term super trend, which has just reversed. This is not a table-thumping good sign. It's a good positive sign. So I would like to see IT going above Thursday's high. If that happens, IT's support will come back. I'm going to mark it green, but you have to understand the IT's green flag and the auto's green flag are completely different, right? So auto is on the verge of a breakout. IT is on the verge of extending the bounce back. So we have to deal with them separately. After IT, it comes to consumer durables. Good looking RRG, left to right, down to up. Pharma, good looking RRG, same left to right. But if we take a look at the price chart, they're saying a different story, especially if I take a look at the consumer durables. When I take a look at the consumer durables, I see that this resistances did hold. It has fallen sharply last week. My state of flow, which was positive, has slipped. The daily chart is completely in a negative state, and there are no distinct signs of momentum reversal. So I cannot mark it green. Though it is improving in the RRG graph, it's a good-looking RRG. Price, nah, it's not going to happen. Pharma used to be amazing, isn't it? Just 2 weeks back. It was the extent of the fall which was a put-off. The tariffs, the way Sun Pharma, Dr. Reddy, DVs, all of them fell so sharp. This was the reason why it's created a huge range and it's given a sharp reversal. Weekly chart, okay. I'm not too negative here. Daily chart, okay. It's neither very negative nor very, on the upside. We have a super trend reversal, which I just plotted in front of you right now. So you have to be selective. You have to be little careful selective. So I'm not going to mark it green yet. In fact, you know what? I should mark it green because the daily charts are showing signs. So I would like to see for a pullback and then the move. So let's keep it green. But in order of preference, of course, it is auto, it's PSE. Of course, within PSE will be PSU Bank, then IT, then Pharma. Just because it's green flag does not mean all of them are equally bullish. And I'm left with the last one from this list is the Nifty metal. Seriously, excuse me, it's not doing anything. It's been all over the place. It's very difficult to make sense from that RRG graph. Let's try and make sense from the price chart. Price chart, weekly, okay, means momentum back to negative trend, all right. Choppy, yes, it has been choppy. It is still relatively choppy. If we zoom in and try and take a look at the recent price behavior, I see something interesting, important. I see a very good looking solid green Heiken followed by a pullback bar. Momentum is improving, super trend has reversed. This combination is giving me very short-term signs of improvement. But I'm not going to jump and call for a positive sector. I would like to see a move above this high. This is important. So I'm going to mark it green because I'll be looking out for opportunities. However, if it falls below these, then this bullishness, short-term bullishness will dissipate, will go away. Okay, we'll keep an eye on metals. I'll go and take a look at the constituents, the ferrous names first. Tata Steel, of course, enjoys the maximum weightage. You know the drill. I will follow that and try and figure out from which stock can I expect this breakout? Which stock gives me this kind of a combination? Now, there are a few other sectors which is not there in the RRG list. That is your capital markets. Now, these sectors I had added to my watch list maybe a month back. Very strong rally, short-term correction, taking a breather and reversing. Recent improvements, advancements from the SEBI, which has helped the capital markets. The stocks have rallied a bit. So this is showing signs of revival. Enough signs to market green? Yes. Defense. Great rally, going through a steep correction, trying to form a double bottomish kind of a, bottoming out formation pattern. State of flow, which was negative, has come off. Momentum has improved. Trend very, very early, very, very early. Just can't confirm, but has the potential. I'm marking in green. India Digital, this pack had a good move. Weekly chart, okay, nothing great. Daily giving us a reversal. Again, had a good move from many of these constituents. I'll be looking out for some kind of a pullback and then the move. So marking it green again. And last, tourism. Tourism was one sector which was touching 52-week high and all-time high just few weeks back. Weekly chart is okay, not bad. Daily chart just reversed. My state of flow is not positive yet, but it is showing potential. So I'm going to mark all these new names positive. So with this, what should be our strategy? Selectively bullish on the long side. Remember, we are on the long side. We are not trading a breakout. We're trading a bounce back. So we need to be careful, cautious. The meaningful sectors, Bank Nifty, private banks, finance, they are not ready yet. At least the price is not giving us that conviction. IT, mild signs, very, very mild signs, very important to scale above Thursday's high. So the top maybe 50-55% weightage of the Nifty is not giving me any high conviction long setup. It's coming from the rest. It's coming from digital, defense, capital markets, PSU, and then there's auto. So we have to be selective on the long side. We are going to trade a bounce back, so we have to be careful. Levels very clearly will be last Tuesday's high and low. Best for these kind of markets is to take it one day at a time and go for those stocks which have a bit of relative strength in them, those which have already bounced back. I've flagged these green sectors. It will be very interesting to see how these sectors play out next week. Right? All right. So that's it from my end. I hope these videos are useful. Do let me know in your comments and prepare well for another, I think, very interesting week of trade, which is coming up next. Thank you for supporting my work. Take care of yourselves. Trade well.